In a few minutes, In Focus with Brian Sullivan kicks off. He's here now with a preview. Brian?
Oh, how you doing? We're all working hard here. No worries. All right, Pim, we're going to be joined by one of the top money managers out there, Louis Navellier. I know you had him on your show not too long ago. His Touchstone Large Cap Fund up nearly 21% this year. We'll talk about the volatility in the markets, his concerns maybe about deal flow, and he'll also give us a few of his favorite picks. Plus, more in the markets with Simeon Hyman, Lehman Brothers equity strategist. We'll talk about the state of the economy with a leading indicator, Norfolk Southern. Their CEO, Charles Wick Mormon, will be our guest. And we'll discuss the current concerns in the stock market with Stephen Lieb, head of Lieb Capital Management. A lot to get through in Focus, and it's up here in about 13 and a half minutes. Back to you.
Looking forward to it, Brian. Thanks very much. Now, we're back with Drew Kanaly of Kanaly Trust Company. And, Drew, let's talk about the commodity markets right now. Oil, $75 a barrel. You're coming to us from Houston. Must be negative unemployment rate in Houston right now. Do you see that oil prices are going to increase?
It certainly is happy days in Houston, and you know, in the short run, okay, with terrorism and threats you just really can't foresee, sure, you could have a supply disruption because the supply string is so tight. But in the long run, you've got to believe that in any commodity, you're going to have a substitution effect, and the prices are going to come down.
What about when you talk about natural gas? The prices there have been volatile. They have come down. A lot of people were expecting that to happen maybe 6 months ago, not now. Do you think that the natural gas prices are poised for a recovery?
It's a question about just BTUs, whether it's gas or oil, whatever it is, and the markets are trying to sort things out. And so, you know, we're going to see how it plays out. In the short run, there's a lot of pressure on prices, probably to the upside. But in the long run, substitution's got to kick in.
So, in terms of substitution, what are you doing to position your clients to benefit from that?
Well, you want to try to, in terms of the portfolios, you want to try to move away from the commodity risk. And so we've tried to skew the portfolios like towards oil service, where regardless of gyrations in the commodity price, there's still, that technology needs to be employed to find more energy. And that we view that cycle is going to continue. In terms of things like, you know, nuclear and coal, we're really not looking at anything like that.
What about other types of commodities? You said you're not looking at coal, you're not looking at nuclear. What about basic commodities, iron ore, molybdenum, all of these specialty minerals and metals that are going into infrastructure projects?
Right. We have a position in gold, and that's really sort of an inflation hedge for the portfolio, and we're looking for some other commodity play that will help our clients, you know, as a hedge against inflation if other things should collapse.
What about agricultural commodities? Any interest there?
Not us, not today.
But do you think that the price of agricultural commodities is going to continue to increase?
Well, it's a problem. I mean, if we continue to burn our food, okay, there's going to be pressure there. I mean, you know, I always kind of wonder, you know, they planted all this corn, you know, what was displaced by that, and you see that expressed in other agricultural products because we planted all this corn.
And do you think that that's a wise thing? Do you think that that's something that's going to really relieve the pressure on oil prices?
Well, you haven't seen it so far. So in terms of a policy for energy prices, it's a non-starter. It's not going to solve the problem.
Connect the trade policy to the substitute for oil as well, because there's obviously a tariff in place for Brazilian ethanol coming into the United States. Do you see that trade policy is going to have much of an effect on the price of raw materials?
Well, I mean, if they really wanted to have an effect on it, then they would lift those tariffs. Instead, we're paying a higher price for all of our agricultural commodities, and this is a political issue. And so there's not a whole lot from a portfolio standpoint I can do politically. I can just respond to it, you know, and just try to avoid those sectors that we think, you know, bad policies are going to affect.
Right now, are you hedging at all in any of the oil markets, for example?
No.
No? You're long oil?
Well, theoretically, yeah, we're long oil. That's
okay.
correct.
All right. We're going to take a break. Hang on, Drew.
Okay.
When we come back, we're going to get some final thoughts from our guest, Drew Kanaly. He's the chairman of Kanaly Trust Company. You're watching Bloomberg's Open Exchange, and it's 51 minutes past the hour. Welcome back. Drew Kanaly of Kanaly Trust Company. He's been our guest this hour on Open Exchange. And Drew, now let's look a little bit overseas, because I know there's some issues there that you were talking about during the break that affect competitiveness and where capital is going to get the best return. So which areas of the globe do you think right now have the policies in place that are really going to attract increasing amounts of capital?
Well, if you look at your political success in the Eastern Bloc, Ireland, Mexico, Turkey just had a very favorable election. They're all flattening their taxes and creating a more favorable environment not only for the consumer but for corporations. I mean, what's one of our best performing markets this year? It's Germany. lowered corporate income tax rates, moved the tax over to the VAT. There you go. And so capital's flowing that direction. All you have to do is travel to these parts of the world, and you can see the success emerging.
How do investors participate in that, though? I mean, if you're talking about places like Ireland or talking about places in the Eastern Europe, what's the best way, do you think, for investors to participate?
They've got to get into some emerging market funds that offer them immediate diversity. They've got to think about, if they're going to go domestic companies that are going to be supplying these emerging markets. And so you can watch this global taxation. And so that's kind of what creates the dark cloud for next year. If our policymakers don't put us in a competitive position against these flattening taxes abroad, there may be issues for us.
What do you think is the biggest problem on the horizon for U.S. tax policy right now?
Well, just the political process and the thought that if we raise taxes, either on private equity funds or somebody else, it's not going to have an effect on the other side, that capital just has no effect on it, and that's not the case at all. Capital is going to move where it's best after tax returns are achieved.
And when you look at the emerging markets, what about some of the lesser-known markets, perhaps in Asia, for example, not China, not Japan? Where are you putting your money there?
Not so much in those markets. Let's take India, for example, okay? It's not even a $1 trillion economy. There's a lot of talk about it because there's a tremendous population base there, and their growth rate is good. But they don't have the infrastructure, say, China has in terms of roads, bridges, dams, electricity, power. So it's a little behind. So you're still looking at things like China and Eastern Europe is really pulling these things along.
Tell us about your Eastern Europe exposure. Where do you have investments there?
It's broadly. We're not targeting any one. These are all individually very small countries, smaller markets, but collectively it's getting to be a size.
I noticed you haven't mentioned Russia at all. Have you invested in Russia, and do you think that that's a good place for people to be prospecting?
Russia's fine. Okay, they've got some issues kind of immediately, but Putin's watch is almost over, so we'll see what happens there.
Okay, Drew, we're going to have to leave it there. Thanks very much. Appreciate your coming in. Drew Kanaly of Kanaly Trust Company. Thanks for joining us. Coming up on tomorrow's edition of Bloomberg's Open Exchange, Craig Hester of Hester Capital Management will be our guest. He's going to explain why he believes earnings, liquidity, and relatively low interest rates will push stock values higher in the second half of the year. I look forward to seeing you then. Thanks for watching.